Let's talk about UnitedHealth, stock symbol UNH. The stock is absolutely crashing. It's down 18% alone today off of the CEO stepping aside for personal reasons. Plus, they're suspending outlook and guidance for the stock. It's down over 50% from the all-time highs that was just set in November of last year. And this isn't just some kind of small company. Prior to this huge sell-off, it was the biggest influence on the Dow Jones Industrial Average because the Dow Jones is a price-weighted index. And at the time, UNH was the strongest or the highest priced stock on the index. So this is a huge tumble. It has huge market implications. And to this day, it remains in an absolute free fall. So in this video, what I want to do is I want to highlight the technical levels that we need to be looking at, the trend lines, and the potential areas that it could try to find some support and where it might present some long-term value for traders. So let's go ahead and dig into that chart right now. Going back to last month where it missed its earnings and it just had an absolutely horrible report, it sold off in dramatic fashion, dropping over 20%. And then the dip buyers, and this is where a lot of people got themselves in trouble, they saw this huge sell-off, and if they didn't get in the first day, they saw the continuation to the downside as a reason to go ahead and get long on this stock because dip buyers over the past 4 or 5 months have been very aggressive buying stocks at every turn. So you get a big name like UnitedHealth that drops as much as it does from its earnings, they're buying the dip. And especially once they get that first green candle, they're already jumping in on it. However, that was short-lived and it continued to drip to the downside, even though the market was rallying in a historic fashion of its own. Completely ignored by UNH, and it continued to drift to the downside. So then you get the news today, and now you have people absolutely panic selling. The fever on social media around UNH was off the charts. There's a lot of commentary. There's a lot of hoopla on the social media. There's a lot of panic on the tape. So with that, the people who got in here are now down about 30% on their trades. And they thought at this point they were getting into an incredible buy. That's why you have to be careful about buying the dip because sometimes the dip keeps dipping and you don't want to be caught on the wrong end of that. So where does this stand relative to key support levels? Well, first off, we've got to understand what has been going on since really 2022, and that is it's a stock that's been primarily trading sideways. Yes, it's had its moments like what we saw in the tail end of 2024 where it reached into and established new all-time highs, but for the most part, it has been trading sideways going back to early 2022. Now, it had that breakdown. Once we had that huge earnings miss, it had the breakdown, it came back, retested that support level, and then it completely fell apart. Notice, though, this little squiggly yellow line here that continues to drift to the downside, that's your 5-day moving average. In all of this, it has yet to even break the 5-day moving average, so it's one of those things to where why would you even consider it when it can't even break the average price of the last 5 days? At least let it do that. Establish a little bit of where the dust settles and allows you to get maybe in at a more respectable price because right now, free fall, it could go still much lower. And look how oversold this stock has been going back to mid-April. I mean, it has not been able to find any kind of traction to the upside, hasn't been able to get above the 5-day moving average, so why get into it at this point? Now, let's look at the more pressing levels here to watch for. Now, you may have a bit of a support level trying to kick in. Now, these are support levels that haven't been tested since really 2020. I mean, you're going a ways back here, but there is some support. When we pull up the weekly chart here, I apologize for my big head getting in the way there, but you have some support right there going all the way back to 2020. Now, it hasn't been tested since later that same year. So coming back down to it, will there be that muscle memory? There remains to be seen. We're testing it, but what we need to see is a test, a hold, and then a bounce. To give you a little bit of perspective, if you take QQQ and you look at the chart there where essentially we found our bottom there at a previous highs going all the way back to 2021. Yes, these levels can come back and offer up support for the broader market, just like what it did for the Qs right here. So going back to UNH, this is going to be a level that needs to be in focus for tomorrow. Now, the bigger trend line, and this is probably the one that has me the most interested, is this rising trend line that goes all the way back to about 2012. This trend line has been tested on multiple occasions, and it's held each time. Let's pull it up on a monthly chart to get a better picture of it. Here you can see back in late 2012, it was established, and it's been tested, and it's held every single time. You had a test back in 2015, that held. And then from the lows of 2020, during that huge sell-off, that level held as well. So there is some memory with this level, even when it tests at 5 or 6 years later after the previous test. Right now, we would be looking at a little bit under 5 years since the last test, but nonetheless, that's coming up very quickly. So if this price level support at 310 fails, I would start to be watching for what happens around that 290 to 292 area and whether or not support can finally kick in right there. So looking at it from both the weekly, the monthly, and even the daily chart, you can see where support has been failing on the daily. There's potential for price resistance right here with the orange line on the weekly. And then from a long-term standpoint, if this support level can't hold, then you do have some long-term support here that could hold if it gets tested at this 289 to 290 area. It's down 50% off of its all-time highs. That's getting pretty significant. And when you look at it from the weekly standpoint, you have this 200-week moving average. And even that's been blown through. We tested it back in early 2024, found support there, tested it again, and in late 2024, held it as well. And then it finally broke through in February and then continued to the downside ever since. You look at this 200-week moving average, though. When was the last time that we actually had something similar like that happen to where we traded significantly below that? And you would have to go back to the great financial crisis where we tested it and then we bounced off of it. And then finally the rug got pulled out from underneath it, going from its all-time highs back in 2005, 2006, where it was at $64 a share, down to $14, $15 a share. You're also looking at a 2.2% dividend. It's been a good dividend grower over the years. That remains to be seen whether or not they will keep that going with the bad news that's been coming out of late. However, this kind of move here provides a little bit of precedent for just how bad it can get on one of these stocks when it starts to fall apart. 200-week moving average, it ended up dropping from 64 down to 16. That is a huge move to the downside, about 75% off of its all-time highs before it finally found some support. Now, does that necessarily mean that we're going to drop that far off of the all-time highs? Well, we're already down 50%. So, yeah, going down another 25% based off of what we've seen so far isn't the craziest thing to potentially see happen. And if that does take place, then you're going to want to start looking at additional support levels underneath. One of them could be this support level at around 273, not too far below the rising trend line. And then you would have to start taking a look at previous lows and previous highs and see where those start to kick in at. Maybe it's like somewhere around here at around 210. That could also offer up some key long-term support if the bottom continues to fall out of this stock. One of the things you want to remember, if you're looking at it from a long-term perspective, what I don't like to do with my long-term positions is to get all in all at once. What I want to do is I want to build my position over time, maybe like 6 to 8 months at a time. That way, if it does continue to sink down, I'm actually benefiting from the move to the downside. It's different than doubling down. Doubling down is where you have a full position and you double your exposure than what you ever intended to do. That's not what I'm advocating for here at all. Instead, what I'm trying to say is that test the waters with like a toe or a finger at a time. Don't try to jump all in with both feet because then you're going to get soaking wet right out of the gate. You're going to sink right down to the bottom. What you want to do here is just gradually build a position. If it goes right back up to all-time highs, which I don't expect it to do, but let's say it did in the craziest of worlds, let's say that happens. Well, if it does that, you still were able to take advantage of the lower prices but just not to the same degree that you would have liked to. So building a position over time makes the most sense with this one, not trying to get all long on it right away. If you enjoyed this video, I'd encourage you to like and subscribe to this channel and let me know down in the comments below, what are your thoughts on this UNH? Do you think it has further to go? Do you think that the 311 is not the bottom and that it's going to go into the 200s? Let me know down in the comments below. Thank you guys, and God bless.